this video, I would like to point out a couple of things I'm seeing and the sentiments of the market and what I'm looking at going forward, and also like the support and resistance of many sectors and how each sector plays out with each other. So first of all, we're looking at QQQ, which is the tech sector at the 5-minute time frame. And yesterday I was talking about we broke above the triple top resistance right here. So we broke above here yesterday and we hit this resistance and we ended up closing within it. So we chopped around here and we ended up closing it. So there's not much change for the bulls yesterday unless we broke above this area. And today we had a gap down in the morning as the futures gap down, and pre-market we had our PPI data, which came in actually better than expected. So that actually raised the pause and 25 basis point to pretty even. So right now it's shifting from 50-50 to like 60-40-ish back and forth. And before it was more closer to like 65%, 25 basis point. Now it's shifting a little bit more closer to a pause after getting a decent PPI data. PPI data leads CPI data. So CPI is a little bit more lagging than PPI. So if we got a good PPI, it's a good sign for the bulls. And the morning, SPY was dragging down QQQ all day. So here, I'll show you guys. So SPY essentially could not get over yesterday's low of the day. So this was the SPY's low of the day yesterday. And you can see that we bounced in the morning. We couldn't get over it. And couldn't get over it. And SPY was making lower lows. And you can see we even broke low of the day. But as QQQ was actually making higher lows. You can see here, this low was higher than the previous low. So QQQ was forming a trend change. If we go to the 50-minute time frame trend, you can see QQQ. Let me erase that real quick. You can see QQQ forming a 15-minute trend change here to uptrend and a continuation of the uptrend as well. So there's no red flags for QQQ other than SPY dragging it down all day and QQQ holding relatively strong. So there was no, this kind of a market sentiment means it's more of a balanced day. So we had a gap down and bears don't continue selling. It's not a full fear day where you just everything drops at the same time, all sectors dropping together. This would be more of a balanced day where one sector is holding up the other sector is dragging down the other sector. And so essentially it's the financial sector dragging everyone down because financial sector is a large holdings in SPY. So I'm going to go to the financial sector here, XLF. So we had a gap down as well. And we could not get over the low of previous low, the all-time low that we had on Monday. So essentially yesterday I was talking about that this bounce was too shallow and we were having a daily bear flag because we did not bounce over the 0.38 Fibonacci line. 0.38 line is right here to this yellow line. And the likelihood of us having a bear flag is still on the table. And we could have chopped around, but we didn't. We actually gapped down below it. And we could not get over it. You see 1, 2, 3 tries. And it rolled over with the SPY. Even with this rolling over of the SPY in this area, you can see right at this time frame, 325 to, sorry, that's not 325. From this time frame to this time frame, it's you can see QQQ holding a higher low. So that means that we don't want to go too bearish, and we don't want to just short the market for no reason and just because the financial sector is going down. So this kind of day is a day where you either just sit out or you play the chop. You know it's going to be a balanced day, so you take profit once you get the balance or once you get the small short going, you take a profit. Because it's not one of those days where it's going to trend up all the way and then you take profit at the end of the day, or it's going to go all the way down and you take profit at the end of the day. Actually, what I'm looking for right now would be QQQ breaking above this level, the 300 level, as well as SPY breaking back above the 390 level. So 390 level is a level where you can see on the daily time frame, we need to break back above 390 level first, which is this level previously. And then we got to test the 200-day moving average. You can see right here, 390 would be previous high on Monday's high. And then we got to retest the 200-day moving average as well. So if we can do that, bulls are setting up for a daily higher low. Let me just leave this real quick and we'll show you the daily time frame. So daily higher low would be bulls. Exact. So this is a 2-day bounce. And if this is the daily higher low right here, then we're starting to shape up a daily trend change, meaning that we have to break above this high, which is 393. If we do break above 393, then I'm going to be going bullish. I'll be likely holding a long position there because we'll be back above the 200-day moving average and we'll change the trend change back to a daily uptrend. That means we'll have a weekly uptrend and a daily uptrend at the same time for the bulls, because you can see we did not break this low when we came down here. If we do break this low, that means the weekly uptrend is gone. Currently, we're still in a weekly uptrend, and meaning that bulls need to hold above this weekly level. So when we hold above this weekly level and we can hold up this daily level here, today's low, and make a higher high here, higher than 393, then a daily trend change has also formed. So if we get a weekly uptrend and a daily uptrend, and then when you zoom out into the smaller time frames, if we do get a daily uptrend, we're likely also in an hourly uptrend. And also the smaller time frame will also likely be in an uptrend. Then you will mostly be going bullish because you're playing with the trend. So I'm looking for that. And if that happens, then I am likely going to be adding long positions. Also, if we do hold today's level, I'll probably add some positions as well and just set a stop loss at today's low. I'll be playing the leverage ETF. So I'll either be adding TQQQ, which is the 3x leverage ETF for QQQ, or the SPXL, which is the 3x bull leverage for SPY. And currently, we have to see XLF bounce. So if XLF can bounce, it'll drag the SPY up, and then QQ won't be dragged down. So we have a nice bounce with that as well. So we need to essentially break back above Monday's low. So right now we tested it 1, 2, 3, 4 times here. We couldn't get over here as well. We did have a nice green candle into the close, but we're still literally just right on the line. So tomorrow we get a small candle. We're above it pretty much. So we will likely see if a bounce goes tomorrow, and then if we, let's say we drop a little bit and retest that area, and then we held it, and then we boom back up again, then that's a good sign for the bulls to start adding their initial positions here, and they can start scaling in as we head higher with the market, and essentially you can either take profit at 393 and scale out some positions to be risk free, and then set a stop loss at the low and let the rest of them ride and see if we potentially break above this level. So if we do break above this level, you can let the rest of your positions ride and hold for a bigger profit. So that's all I'm looking at for right now. And we'll see if the bulls can actually shape up for a daily trend change here. And if not, we'll see bears can come back or not, but so far it's not looking like it. Most of the bears and bulls are waiting for the FOMC meeting next week on the 22nd. If we do get a pause, we'll likely be pretty bullish because tech sector is the sector that is affected the most by the rate hikes. So that's why you're seeing it being held up a lot better than SPY. So essentially, we went from 50 basis point hike, probably of 70% last week, into 25% over the weekend. And now we're into potentially a 50% chance of having a pause. So that's why the tech sector has been pricing in that rate hike going lower. Meaning, when we were at 50, there's still headwind for the tech. So now we're potentially at no hikes, meaning the market's got to price in one of those bullish reaction for it. That's why the tech tech sector held a lot better. And if we do actually get a pause, then we'll probably get another rip in the tech sector. And if financial sector starts cooling off and start not dropping anymore, then it will be also a bullish as well with the tech sector. So if both can bounce together, then we're likely getting a nice pop in the market. And we'll see how it goes.